In this video, I want to introduce the best all-in-one indicator for price action trading. To add this amazing indicator to our chart, first here we increase or decrease the scaling a little bit so the chart will not be contracted, and then here we click on indicators and we search price action toolkit, this one which is written by UAlgo. Alright, this is the indicator, and as you can see many lines, levels and labels are added, which I explain all of them now. First here you can see that a trend line is added to the chart. This indicator adds a trend line for the current trend of the market. So if there is a formation of a trend on the chart, the indicator will add the trend line. For example, here you can see that we have higher highs and higher lows, which is formation of an uptrend, and the indicator has added an uptrend line. As you can see here, the price couldn't pass the previous higher high, so the uptrend is weakening now by this resistance level ahead of the price, but still we are above the trend line, and it is expected to have rising of the price when the price is near this trend line. If the line doesn't hold and the price closes below the previous higher low, the structure of the uptrend is violated and probably a reversal is going to happen. This breaking of previous higher low is called change of character, and this indicator also shows it when it happens, which I explain it later. And similarly, when the price is in a downtrend and there is a formation of lower highs and lower lows on the chart, the indicator draws a downtrend line. If we go to the settings of the indicator, if we turn on this show market structure, zigzag lines will be added to the chart, which can help you in better identifying the structure of trends and price movement in the market. This indicator also shows liquidity levels on the chart, which are these green and red lines, not the zone. The zone is order block, which I explain it later. I am talking about these lines, the green line and this red line, and these are liquidity levels. These areas are usually near top or bottom, and they are actually areas where traders use it to place their stop losses beyond them. For example, a trader who entered a short position around here, which is near this top level, he or she will place the stop loss in this area above this line, because they believe if they are wrong, the price will break this level. So they consider this area above this line for exiting their positions. They entered a short position and their stop order is a buy order. So there are lots of buy orders that are placed here in this area. That is why it is called buy side liquidity. It means that in this area we have already liquidity for buy orders. On the other hand, a trader that, for example, enters a long position around here near this bottom level, he or she will place the stop loss here below this line in this area, because similarly they believe that if they are wrong, the price will break this level. So they consider this area for exiting their long position, and for exiting their long position they need to place a sell order. So there are lots of sell orders which are already placed in this area. That is why it is called sell side liquidity, meaning in this area we have already liquidity for sell orders. Institutional and large traders take advantage of the liquidity areas and they enter long position or short position near these levels, which many stop losses are already placed. Actually, it's because of the large amount of stop orders that these large players can fully realize their positions. When these areas are traded and the liquidity is swept, most of the time the price will reverse and lead to the opposite direction, seeking liquidity on the other side. Knowing about liquidity levels will help you to better prepare for your stop losses or entering a trade when the liquidity is already swept and the price is going to the other side. Alright, as I mentioned earlier, these green and red zones are order blocks. In case if you don't know what order block is, order blocks are price ranges where large market participants like institutional traders, banks or hedge funds have previously placed large amount of buy or sell orders, so causing of significant price movement in the market. In other words, order blocks are areas of the chart where there has been a large amounts of orders executed. Basically, order blocks are identified through price action, where we look for areas of the chart when the price suddenly changed its direction and the market saw a considerable price movement. There are some price action patterns that can help you in identifying order blocks. In practice, identifying order blocks is not easy and it needs skills and experience in price action analysis, but by the help of this indicator, you can simply have order blocks identified on your chart and use them in your trading strategies. Alright, the next concept is related to the structure of the market, break of structure and change of character. When the price is advancing in an uptrend, when the price makes higher high and goes for a pullback, this high is a potential resistance resistance level, and the price may get difficulty for breaking of this level. When it is broken, it is called break of structure, and it is shown by BOS here in this indicator, and it's a signal for further advancing of the price. And similarly, when the price is declining in a downtrend, when the price makes a lower low and then goes for a pullback, this low is a potential support level, and the price may get difficulty for breaking this level. When it is broken, it is called break of structure, and it's a signal for further decline of the price. And about change of character, when the price is advancing in an uptrend, we know that the price is making higher highs and higher lows. When the last higher low is broken, this is change of character, and this is a signal that the prior trend is probably ended and the price may turn to a downtrend, or the price may go to a trading range. And similarly, when the price is declining in a downtrend and it is making lower highs, when the last lower high is broken, this is change of character, and this shows that the prior trend is probably ended and the price may turn to an uptrend, or it may go to a trading range. Price action analysis is important in trading, whether for entering a trade, setting a stop loss, or your profit target. And this indicator perfectly helps you with price action concepts so you can effectively make your trading decisions. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.